Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm Samantha Voon, and let's start by taking a look at the market summary action today. So over in Japan, the Nikkei 225 has been seeing significant fluctuations. The recent downturn was caused by the BOJ's unexpected hawkishness and disappointing earnings from major companies like SoftBank. Now, the index initially dropped sharply, but later recovered most of their losses. Today, the two-day rebound has halted and is now slightly at down 0.56%. So, um, okay, hold on. So the reason today rebound halted because of the BOJ's release of a summary of option opinions today, suggesting that a further rate increase is likely to happen with the target around 1%. Over in the broader market, major tech stocks in Asia track the weak performance of their US counterparts, particularly in the chip making sector. Now, South Korea's Kospi fell 0.6%, recovering slightly from earlier losses, while in Taiwan, the TSMC's, the world's largest contract chip maker, dropped 2%. This decline followed 2 days of significant losses in the US chip stocks, influenced by the underwhelming earnings from major companies like Super Microcomputer. Over in China, the Shanghai Composite is up 0.38%, and in Hong Kong, the Hang Seng is up 0.52%. However, gains were restrained by weak trade data released yesterday. Now, this data indicated a significant reduction in China's trade surplus in July, with exports unexpectedly shrinking due to high tariffs imposed by the European Union on the Chinese EVs. Furthermore, imports of copper and oil also saw a sharp decline, reflecting broader economic challenges. Over in Australia, the ASX 200 is down 0.35%, and in India, the Nifty 50 is down 0.41%. Market attention in India is now focused on the upcoming meeting of the Reserve Bank of India, where the central bank is expected to maintain current interest rates. Now, to give insights to markets, we have our guest, Kay, from Ascent Capital, Final Upgrade, and the HODL Group. Kay, welcome to the show.
Awesome. Happy Thursday. Great to be here.
Happy Thursday. All right. So much has been happening, like we spoke about slightly earlier. What do you think is the market's biggest focus right now? Maybe you can share on that.
Yeah, well, Samantha, I think we're talking about this off screen. Maybe we could just bring up the chart about what it's all about. Because I think this really kind of gives context on what we've been going through. So here we're looking at a daily chart of dollar yen, and you can see it had been weakening quite aggressively, since the start of 2024, and got to almost like the 162 levels. And then basically over just the last few days has been making massive, massive moves lower. And then, of course, what we got last week was, as you alluded and mentioned before, the first hike from the BOJ in 14 years. Now, a lot of people may be thinking, well, it's 15 basis points. What's the big deal? Well, it's the first one in 14 years, and it was on 10 basis points before. So it's over 150%. And the backdrop of this, as we all know, was already a weaker market over the last few weeks out of the US. A lot of the big tech names, the big seven, down pretty massively. And we came in this week, and Monday basically was one of the worst days in financial markets history. So we had stuff like the Nikkei seeing its worst drop since 1987, Taiwan equities indexes saw the worst drop since 1967. And bear in mind, this is the main equity index. This is not individual companies. So you can imagine the move some of the individual companies were seeing. Some of the estimates of the damage done with this big Japanese carry trade are in, the 20 trillion plus. We of course lost trillions of, equity wipeout in the U.S. side. Crypto's lost billions, but and also saw massive volatility spikes. Right, so we had the third biggest volatility reading in the VIX, which measures underlying vol in the S&P 500. So, it's Black Monday, and then you come in Tuesday, and quite a bit of this reverses, at least in regards to kind of the Nikkei. So I think there's a lot moving on, Samantha. There's so many ways we can go off of the back of this. The only thing I just kind of caveat to folks is to remember it's still very much summer in the Northern Hemisphere. So there's a lot of liquidity that's not, available that would normally kind of be the case. And we really have to wait for everyone to kind of come back. We call it end of August, kind of early September, right?
Mm-hmm. So you mentioned about the yen earlier. Maybe we can just shift to the BOJ's recent hikes that you mentioned. Maybe you can share
Yeah.
more on what this means for Japan and also the global central banks. Well,
Yeah, yeah.
what's going to
So,
happen
so
here?
yeah, I think it's great. If you take, let's say, the weekly chart here, or even if we just go kind of to the monthly, you'll see. Let's just get this so it's easier to see. Over here and back here. So this here is basically the dollar yen monthly chart. And you can see how big this move is. This is not something that, has only been happening over just the
Mhm.
last few weeks. This is basically a multi-decade move. And you have to go all the way back to the Japanese bull markets of the late 80s. And these are the levels that we are now. So you can see the significance of basically where we are. So I think Japan's a very, very special case because they have so many issues and problems that a lot of the rest of the world don't have, but they're almost the first mover, i.e., level of debt in the system, declining demographics, declining growth, and just a huge kind of deflationary kind of structural force. I think what the key message that I read from the BOJ is not to say that they're not smart. It's not to say that they don't have some of the best people in the world, but this is like, I think, something that's a keen for all global central banks is, you know, like everyone else, they don't know all the answers. And the BOJ is notorious for finally moving, but almost moving way, way, way too late and last. What's interesting from a global macro lens is we're getting a divergence on the monetary side, right? We're going to almost certainly be embarking with the Fed in September in regards to a cutting cycle in the US. There's talks of maybe a hawkish move coming out of the RBA in Australia, which could be very
Mhm.
different from what we're seeing from some of the other central banks. And that's always interesting. But I do think there's a reform angle here to really be discussed and highlighted. And I think we're going to look back, whether it's 25, 50, or 100 years, hopefully sooner rather than later, and say, what was this ritual we practice where a few people would go into a room a few times a year in these, honorate robes called suits, and then make decisions of raising or lowering rates by 25 or 50 basis points. Samantha, all of this should be automated, right? Why do we have to wait one day to cut or raise by 25 when we could just be doing this on a daily basis by half a basis point or 1 basis point and take out a lot of the volatility in the market? So I think there's a big call for central bank reforming to just kind of catch up in the day and age that we are in today.
Mhm. And when do you see that happening? Just
I don't know if I see it happening anytime soon, unfortunately,
Mhm.
because you can imagine if you and I, as central banker, we've worked hard to get there, we want to protect that role and that status for as long as possible. Then we want to get out of public service and go out and, do $50,000, speaking conferences, and of course work for big hedge funds and private equity funds. So
Mhm.
it's going to take a lot more than just like a generational shift. I do think you will see though more of this modernization, if you will, of not just central banks but just monetary policy and fiscal policy, probably really led by the emerging market side. Whether it's something like, let's say, in Argentina or in El Salvador, where you just don't have, very, very deep entrenched incumbents as you would in, let's say, a Europe or the US. So for me, it's not a question of if, it's really when, right? And I just think the cost for the current system, it just ends up being, much, much bigger than it needs to be. And it's always the same drill, right? The most people who pay for it are the ones who can least afford to pay for it.
Mhm. Yeah. All right. So, Kay, you touched on this just now as well. We're getting towards the final leg of summer in the Northern Hemisphere. So, traditionally, Europe is out much in August, right? So, when markets come back in September, what can we expect and what should we focus on?
Yeah, so I would expect just to play out while we have the charts out here that some of these big pullbacks that we've been seeing in tech. So, for instance, Tesla's now below 200. Nvidia, of course, has been very much in the crosshairs. This was down, 5% overnight. It's down close to 15% of the month. I would expect a lot of this to be reversing because the main theme coming back is going to be focus on the Fed, the beginning of a cutting cycle, I should say, as well as the slowdown we've been having in regards to not just economic data as well as inflation, but also the jobs data on that side. But front and center, I really think so much of the next few months is going to be around the U.S. elections. We talked about this last time with you and Brian, right? November 5th is a key line. And a lot of how that plays out may dictate a lot of the wins or headwinds that we'll be having for at least the next kind of 4 years. So that's the big, I would say, focus point on most global markets, people's minds.
So, Kay, do share with us what's your view on what's happening with Kamala and Trump. Tell us what's on your mind.
Yeah, so tuning into kind of U.S. elections, we obviously saw the big VP bet that Trump did in J.D. Vance, a controversial figure and an outlier, but worth noting in his 30s, right? Which I think is already a huge win for any taxpayer in the U.S., regardless of if you're taking the red pill, the pink pill, or the blue pill, whatever it is. I do think we need that generational shift in regards to policymakers, right? Kamala took a fairly safe bet in Wiz. I think the more strategic bet would have been Shapiro, who's quite the rising star in the Democratic camp. And it would have been the bet that I think would have had a lot of the Republicans, or at least the pro-Trump voters or pundits, they'll be a lot more afraid of a Kamala Shapiro view. Now, it is a little bit of a honeymoon period that I think is coming to the end for Kamala, because she got a lot of this resurgent support simply just because Biden was put to pasture, right? We can go into the semantics of whether he formally dropped out or was forced out or whatever, but that's all besides the point now. So I think there was just a natural skew of people who was like anything but Biden, and rightfully so. Why would you have someone who is not cognitively there in probably one of the most important jobs on the planet? And I think she's gotten a big resurgence on that. And you can see that in the probability markets where it's fairly kind of tight. With that said, there's two things that really need to happen. One is we have to see the formal confirmation of her at the Democratic convention. It's later on in August. I believe that should be over the next 7 to 10 days, at least when I last checked the dates. We all know what happened with Bernie and Hillary. Now, obviously, Bernie Sanders was very anti-establishment. I don't think Kamala's going to have that issue, but there could be someone else gunning for that seat. There's a lot of great contenders out there, and again, Shapiro really kind of stands out. But I think more importantly for U.S. Taxpayers and voters is they need to see Kamala out in a non-scripted form, debating, being interviewed, able to take hard questions, rather than just what we've seen so far, right? Where it's just been sheltered, it's been behind closed doors, and it's very much just been on her controlled terms. I don't think that's going to fly for much longer, and I think it could be something that backfires very, very, very quickly. So it's still far from done, and even if it is still Kamala versus Trump to the very, very end, it's likely going to, go to the line, and markets will act accordingly, until it becomes, much, much more kind of clearer. So I could see quite a bit of vol up and down, but generally kind of, I would say, trending towards the kind of upside because of what's happening on the monetary kind of loosening policy. And I don't really expect any big change in regards to fiscal policy, regardless of who enters into the White House.
All right, Kay. Just want to quickly catch your thought on this. Any final thoughts on the macro before we close?
Yeah, I mean, I think it's going to be same but different. Whoever enters the White House, you're basically dealing with an economy that's slowing down. Despite us printing, 2.8% U.S. GDP growth, we also printing a 6%, budget deficit, right? So those taps can't be switched on without sending the economy into like a really, really hard recession. I think what's going to be more interesting is maybe the different use of that money. So a Trump presidency would definitely see a big reversal in regards to U.S. interference or playing across the board. So Ukraine, Russia, NATO, etc., can be curbed. I think it would be considered more pro kind of business, but obviously for, let's say, us in Asia Pacific, or even if you're, let's say, in part of NAFTA, there definitely could be quite a bit of volatility in regards to kind of trade. And it's really about the Fed and really about the U.S. elections in all things. So we may have a little bit more of a backdated kind of liftoff in regards to kind of risk assets. But one thing's certain, it's going to be entertaining all the way there.
For sure. We gotta all just stay put there. Yeah. So thank you so much for coming on the show, Kay.
Pleasure. Always great to be here. Thanks, Samantha.
So this is KVP, Principal at Ascent Capital, Final Upgrade, and the HODL Group. So this has been BizTech, Asian Midday Market Watch. Be sure to keep informed on the latest market updates, weekdays, 1 p.m. I'm Samantha Boone, and this video and podcast will be on our website, www.biztech.asia, and our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.